What is up, YouTube? What is up, guys? Welcome back to another YouTube video. I just got back from my 5-day trip with the boys. I don't know if you can tell by my voice, but my voice is pretty sore. Like, if you go on a trip with 14 guys, you bet your ass your voice will probably be beaten up at the end of that 5-day trip. So, I'm glad to also be back now. I had an amazing time, but I also just love to get back to work, right? So, in this video, I'm gonna be talking about the one trade that I did take while being on the trip, which was a Pepe short. I made a post about it on X, but I like to go a bit more in depth about my thought process behind the trade, like I always do. And then we'll talk about some Bitcoin price action and then my expectations going forward. Okay. So, we always build context. We've done that multiple times, but let's just do it again. On Pepe, on the weekly time frame, we're simply just in an uptrend, right? Higher lows and higher highs. So, expectational order flow would eventually be a higher low for a higher high until proven otherwise, okay? Now, we also established that, yes, we are in an area of demand. Like, technically, this whole range right here is demand, but there wasn't really anything that significant to hold price up within it because most of it was already mitigated. We kind of had this POC right here that was backed by some sort of range demand right here. And we kind of wick through it, and wicking through an order block is totally fine. It just means that you grab liquidity from that block by taking out the low. So this was kind of my area to watch, but it's not the best looking demand, So in general, I just want to see signs of strength of some like mid time frame to high time frame accumulation that will move us up higher, okay? I can already tell you that if we do break this high, right here, that will confirm that price will have a rotation back up towards the main high right here. Because that will mean that this is our weekly swing structure, right? Higher low and higher high. And in the meantime, we have our structure from the top down that has lower highs and lower lows, okay? Lower highs and lower lows. Let's make it black. So if we break the black structure back to bullish, which is all the way up here, that will mean that this red structure drawing will continue itself, okay? Just some basic high time frame structure. And, that market structure high that we need to wait for it to break, that's pretty far up already, okay? So that obviously changes if you take the low one more time, okay? So if we take the low one more time, if we pull our structure from top to bottom on, let's say, like a mid time frame, if you take the low one more time, then obviously this becomes your new high, making this your market structure high to break, okay? Which will be easier. So I don't mind taking the low one more time before moving higher and kind of having an accumulation of a 1 and a 2 and a 3 in that way. But we don't know, okay? We don't know. But as of now, that's kind of the high time frame context around Pepe. Now, zooming into the trades that we took. There we go. I was kind of checking this move down to see what were kind of like my rejection POIs. So I had this 1 hour order block right here. And then I had this 1 hour supply zone right here. And for the people that don't know, like from the top down, obviously your market structure is just trending down. And basically what I just call like my range supply, this was a wick, by the way, not a close, so it's a wick. And then we went lower. So what I mean with range supply is when I'm talking about range supply, I just pull my supply from my market structure points, as you can see from the low to the high, because this is an area that we got the retrace and obviously sellers took over right here, pushing price lower. So when price comes back to the POI, we can expect some sort of rejection of them protecting their positions. That's kind of the theory behind it, right? But basically what I'm doing is I'm just following my market structure points and I watch for market structure supply zones that aren't mitigated yet, because in these two, right, these are all mitigated. Like the lower high is mitigated already, but this one has not been mitigated yet on these lower high highs. So that's basically what I mean when I'm talking about unmitigated range supply or range demand. I've been getting a lot of questions of people, asking me, hey, how do I identify order blocks? How do I identify a strong demand and supply zones? That's kind of hard to explain over text. And low key, it requires just an entire separate like tutorial talking about liquidity and supply and demand. Um, so yeah, I'm thinking, very close to 3K followers on X. You know what? If I hit 3K on X and I hit 1K on YouTube, because I think we're like at like 800 plus on YouTube, I will make a tutorial for you guys talking about supply and demand zones and extreme liquidity within ranges, which will obviously make your Wyckoff trading 10 times better as well if you fully understand it. And I do go over it in every video, but not in a streamlined process, from like beginning to end. So yeah, right now I made the decision. If I hit 3K on X, which is like 5 followers away, and I hit 1K on YouTube, I will make a tutorial for you guys talking about supply and demand and liquidity. Okay? So what I was basically watching was a rejection in this POI, right? That supply zone that we just talked about. I was watching for a rejection there, and I was basically just checking my swing structure going higher. So my swing structure from top to bottom was just basically this. I think it's like 4-hour structure. Yeah, it's 4-hour structure. So on the 4-hour, we were creating a higher low and a higher high, and we came into that supply zone. So as you guys should know by now, if we're in an uptrend, you pull your range from top to bottom like this, pull your range from top to bottom, and then right here, this is kind of where your range was confirmed on the 4-hour time frame, okay? So we were in this range. We were basically in this range. And what people tend to forget, and I even saw someone talking about this, is that obviously we can pull our ranges from top to bottom on the higher time frame, but in order to get the retrace between point A and point B, you need some sort of downward structure, right? You need some sort of downward structure, and that's basically something that has like lower highs and lower lows, right? Basically something like this. So even though, yes, you can pull your range on the high time frame applying this structure, let's make it red. So your red structure is your high time frame structure, and in those situations, you pull your range from top to bottom, but while you're retracing, you will also have mid time frame structure pointing down. And in those situations, you can pull your range from bottom to top, right? And it happens all the time that a lot of people are waiting for the main high to be taken, but price never takes that main high, and in the meantime you have a distribution on the mid time frame in the upper section of the higher time frame range. And a lot of people get left behind because they're waiting for this range high to get taken, even though you already had the distribution within the bigger range. So I hope that cleared someone's question up, because I saw someone talk about it, but I forgot who it was. So we were in this bigger range. Let's delete it and put it nicely on our chart so it becomes more clear. We were in this bigger range. However, this range also had structure pointing down, right? We can just use the main point, structure pointing down. And when structure is pointing down, you pull your range from bottom to top, and then you can already have a Wyckoff within the bigger range, okay? So this is your range low. This is your range high. This is where it gets confirmed, okay? So deleting it, boom. That's when we have this, okay? Now, I think we even had some supply above there. Did I? Not completely sure. I took this trade very fast. Okay. So what I was watching is obviously price, yeah? We came into a significant POI. We came into a high time frame supply zone. So obviously what I'm expecting is a rejection. And that rejection can be pretty deep, because we had some liquidity right here. We had some lows to be taken right here, and we had some inefficiency right here. And then we had that demand zone where we got the bounce from eventually. So we were in an area where I was expecting a rejection. And then what followed was a range formation. So Yes, we can trade accumulations into distributions, but I'm mostly looking for a distribution with some follow through because we came into a higher time frame area of supply. And that's what I mean with building context, okay? Which is something I went over in my part 2 of the advanced Wyckoff tutorial, okay? So what we saw right here, you guys know we're in the bigger range now, so I'm just want to focus on this local range. What we saw right here is a range high and a range low, okay? Now, and what followed was a deviation of the range low. And I saw someone that took this accumulation long, and on first glance, it looks really good. A 1, 2, and 3, where the target is the range high and the target gets hit. But if you really pay attention to the details, which you should, okay, because details are very important in the long run, you would have to identify your extreme liquidity and extreme demand. Well, if I just scan through the time frames right here, I'm not really seeing anything from a demand perspective. Right here, I'm not seeing anything from a demand perspective in this whole area right here. Not really any order blocks or anything, just a trail of liquidity. So on the 3 minute, your first market structure pool goes like this, and then you just go up from there, where each low is a higher low, kind of making this your trail of liquidity, okay? And then, like I said in the tutorial, most of the time in these situations, your first market structure low will be your extreme liquidity point. So your extreme liquidity point was below your third tab low. So the third tab did not meet all requirements because also there wasn't extreme demand to be mitigated because it was already mitigated on the move up. So if this wick right here would have just came a bit lower like this, it would be 100% valid. This would be 100% valid, okay? But it did not grab extreme liquidity. And I like to be very, very, very specific with my rules because there are rules for a reason, right? But this would have been amazing, but because we didn't get that and we missed it, that's why I did not take this long, okay? So it worked for now, but in the long run, I made this a reason, or I made this a rule for a reason, right? So don't be surprised that, let's say you get that structure break on the low time frame back to bullish. I don't know if you had it on the 1 minute. Yeah. So let's say right here, this being your 1 minute high, if you did get the break of structure here, don't be surprised when price does something like this, where you break it and it wicks you out and then you go higher, right? Because it had a reason to, because it had this liquidity that needed to be taken before having the actual move, okay? So it worked this time, but be careful with it. Now, we got, obviously, this is some sort of an accumulation because it's a very clean looking model too, but it's not 100% valid to trade. But, you can have Wyckoffs that are valid, but they're just not tradable. And this was one. Valid Wyckoff that hit its target, but not tradable. However, like I just said to you guys, we came into an area of supply. And I was expecting a rejection and price retracing, cooling off before having that new move higher. So obviously, there is a very high potential of this accumulation going over into distribution, and that is exactly what happened, okay? So we had the range high, and we got our deviation 1. After deviation 1, we extended to the new deviation high to check for either a model 2 or a model 1. And then we took the high one more time, indicating a potential distribution Wyckoff model 1 in the making, okay? Let's extend this to the new range low because that will be the target. How and when do we confirm that the distribution is in place? Obviously, when we break structure from the lowest point between tab 2 and tab 3 up towards the third tab high. So what do I mean with that? In this distribution, this is your tab 1, this is your tab 2, and this is your tab 3. When do we confirm the distribution? Okay, what is the lowest point between tab 2 and tab 3? That's right here. So we need to check our market structure between this low up towards the third tab high, which is this high, and wait for that market structure to break back to bearish, right? Break back to bearish, and that's when the distribution is confirmed. So zooming in on, let's stay on the 5 minute to keep it simple. On the 5 minute time frame, we have low, higher low and higher high, higher low and higher high. There you go. Making this your market structure low. So the moment price has a closing price above this market structure low, that's when we have a market structure break back to bearish. And that's also exactly where I shorted, right on that close down there. And then you put your stop loss above the third tap high, which is the invalidation. And then you target the range low, okay? Target the range low for a nice 1.93% gain. And if we exit replay mode, we got the follow through that we also anticipated on, because you had these lows here on the left. These lows are on the left and this demand zone right there. So you could have extended your target in this situation if you had built the bigger context or the bigger picture. But what I would have done and what I did eventually was I took a take profit right here. And then I left a little run all the way down to this low. Okay? That's how I managed this. It was like 75-25. Okay? So I cashed out 75 right here. And then I cashed out 25 right here. Fully exiting my position. But you can see how clean this is, right? Accumulation into distribution because we tapped into supply. So deleting all of this. I netted myself over like 2.5%, which is completely fine. It's decent. And yeah, from there we got the rejection and we got the bounce, and we're still in this higher time frame uptrend from the low up. So I do think if you break that low, so let's say this does not make a higher high and you start breaking that low right here, that will be an indication that price could come back towards this main low, and this could be your bigger range in the making, okay? Where this is just an entire new range. That's if we start breaking that low and we cannot break that high properly. Maybe you start deviating it, but yeah, if you break that mark structure from the low up, you can have a rotation back down towards the low that was put in. So that was kind of my thought process in depth about that Pepe trade. You know, we came into supply. I was watching two ranges, you know, your range number one, which was this range, and then your range number two, which was this range, okay? So two ranges, and then we found the distribution short, and then we took it down towards the range low, which is the technical target, and we took it down a bit more, grabbing more sell-side liquidity that was on the left waiting right here. So very simple Wyckoff Model 1 distribution trade. Let's get over into Bitcoin now, okay? Let me have a sip of my water. But this is something you guys need to pay attention to, that you can have these distributions inside bigger ranges. And it was something I talked about in the part 2, you know, where you have like 3 types of structure. Where you have your main structure, and then that main structure has like mid time frame structure that goes like this. Let's make that black. And then that mid time frame structure has like low time frame structure that goes like this. And on any structure pool, you can pool a range. So in this situation, your red structure drawing, right? Your red structure drawing goes like this. That was your swing structure, and then this was your mid structure. You can make that black, right? So it's a prime example, and then obviously your mid structure, because it went like this, right? Which was a distribution. Your mid structure has low time frame structure, which is the blue structure, which was that 5-minute structure we were just talking about that we needed to break back the bearish, right? We just talked about it, just like that. So it's a prime example. This in a real life situation on the Pepe chart, what I talked about in the Wyckoff Part 2 tutorial. So be aware of this, okay? So going over into our good friend Bitcoin, okay? Going over, let's just delete all of it. What time are we on? I want to keep it 30 minutes max. Oh, we're on 20 minutes. Okay, perfect. So Our good friend Bitcoin, okay? Our good friend Bitcoin. In my opinion, the bottom is in for Bitcoin on this macro range, okay? Reason being, actually what we just talked about on Pepe, we can even apply it on Bitcoin. So the reason why I think the range or the bottom is in for Bitcoin is that we had this range, right? This was our starting point. So on the weekly time frame, if I had to draw my market structure, right? On the weekly time frame, if I had to draw my market structure, skipping over a few points in the beginning, don't take this literal, but it's irrelevant now. So these are the most recent ones. That's why I'm putting an emphasis on those. This is our swing structure, like I always said, and this was our weekly market structure low. And this was an area of important demand, okay? Again, for this demand zone, I'm just using my weekly market structure points, and you can see the mitigation from it, right? Nothing special. But we tapped into this range demand, but what we see on the lower time frame here, these were our starting points from our range, okay? Range high, range low. And then from there, we had deviation 1. Let's extend it. And we had deviation 2. And we had deviation 3, and now we had deviation 4. So basically what price is doing is it has just been deviating the low over and over and over again, right? Literally over and over and over, which is a clear signal of, market maker filling their long positions. Because let's say the market makers wanted to dump price and they were actually already fully positioned to dump price. Why would they fail to break out of the range 1, 2, 3, 4 times? Like, why would they just not leave the range? Why are they wicking the range low over and over again? Like, they're clearly not capable of pushing price past the range low, breaking it. And why are they not capable? Because that's not their purpose behind deviating the low or breaking the range low. They just want to deviate it to, make people panic sell and fill their long positions going higher. So we have these deviations of the low, and we have this nice trail of liquidity going higher. But referring it back to the Pepe situation, our weekly structure, like I just drew, is higher lows and higher highs like this. But in the meantime, to get the retracement, we have some sort of mid-time frame structure, our red structure drawing, right? Let's make it red. Just like I described earlier on the Pepe chart, our black is our highest time frame, and then our red is our mid time frame structure. And if we just look at the mid time frame structure, you can just pull your range from bottom to top, right? So you don't have to use the first point. Just like on Pepe, we didn't use the first point. This was your first point, right? This was your first point. This was your second point. We pulled it from our second point because we kind of went past it, and it was irrelevant to look at that low anymore. So we went past this one pretty aggressively. We went past this one. We went past this one fairly aggressively, right? Pretty aggressively. If you just compare this low to that low, it's kind of deep. It's around 7.6%. But if you compare this low to that low, it's 5.8. See? And then if you compare this low to that low, obviously this is 8, but this is a wick. It was just one wick, okay? This was like closes below it. So here you had closes below it of 8%. Here you had wicks of 5.6%. And here you have a wick, just a single wick of 8%. So just like we used on the Pepe chart this second tab as our range starting point using mid-time frame structure, the same way we can do that for Bitcoin, where we just use the second tab right here as our starting point. And when I use that second tab as my starting point, I'm deleting it to make it more clear for you guys. If I use my second tab as my starting point, what do we get, right? What do we get? Well, we get this as our range. And that's when you have a 1, a 2, a 3, aka a Wyckoff Model 1, where using this range, this will be the target. But obviously, if you passed or if you come close to 72, I'm expecting the main high to be taken as well because there's no resistance, right? But that's what I meant with, you can just look at this as a Wyckoff Model 1 and ignore these first few points, because you have also mid time frame structure pointing down while your highest time frame on the weekly is pointing up. And the reason why I think the bottom is in is because all these prior deviations right here, this deviation actually did something. What did this deviation do? You know, putting our macro range back in the chart to make it more visual. Right here, if we put this macro range back on, I'm going to put this also back on because this was also a demand zone that we were watching. There you go. We had these two demand zones, okay? All these deviations here, 1, 2, 3, 4, 5. None of these deviations, mitigated demand. None of them. Only the last one actually mitigated demand. So you could have said, right, on these two or these three, that, hey, there is still a reason to come lower because we still need to mitigate demand. But now you have had another deviation mitigating demand. You cannot say that anymore. There's no reason for price to come lower because we grabbed all liquidity and we mitigated all demand. And if you just use mid-time frame structure, you can look at this from a Wyckoff Model 1 accumulation perspective, right? This is your range low, and then that's your range high. It's just beautiful. It's absolutely beautiful. It shows the most clear market maker involvement ever. And I kind of referred it back to this situation, right? Where also right here, your swing structure, your black structure, which is your swing structure, was pointing up, okay? And then from here, price was just pointing down. 1, 2, 3, 4, okay? And this was like 12-hour structure. This is not daily structure, but I'm going to just keep it on the daily right now, but it was 12-hour because I remember it, okay? And also here, if we do not use that first point and we use the second point, you know, you get something like this, where this is your 1, this is your 2, oh, this is your 1, this is your 2, this is your 3. And then while coming down, deviating that low, we're leaving a trail of liquidity. Like, do you see the similarities? Do you see the similarities? Swing structures pointing up, mid-time frame structures pointing down. We're wicking the low over and over again. And in that last range, we have the Wyckoff Model 1 accumulation with the trail of liquidity above, and we squeeze up. It's the exact same here. Literally, this is the exact same here, where your swing structure is pointing up. Let's make it black. And then this structure is pointing down. And then this was that first low that we're skipping, and we have a trail of liquidity above us. It's the exact same on even a higher time frame. And what does it say about the higher time frame? Well, it just means that the pump will probably be more aggressive because it's on a higher time frame. It took way more time. Okay? But it just shows very clear market maker involvement. And in my opinion, the bottom is in. We will not go past 49K prior to taking the 74K high. But in general, because this took around 150 plus days to form, I think we'll exceed that range high and we'll go into price discovery eventually. Okay? Now, going a bit on more in depth about the lower time frames, right? If I just pull my main range on the chart, you can look at it from so many perspectives. As long as you're just talking about market makers filling their long positions, I am happy with it, okay? Now, zooming in on lower time frames, obviously we need to break structure back to bullish from the top down. Let's just use one that looks clean, like on the 1 hour. Okay, so on the 1 hour right here, we had structure pointing down, and then this is where we had the aggressive sell, and right here we got the market structure break back to bullish. Very easy, okay? Market structure break back to bullish. So what is expectational order flow after breaking your structure back to bullish, confirming the accumulation, a higher low for a higher high? That's expectational order flow. Where will that lower high take place? Well, from an order block perspective, this is the only order block there is. It's on the 1 hour, but on the 45 minute, it also looks very clean. Boom. Very clean order block right here. 45 minute. It went down, grabbed liquidity on the left, and then pushed price higher, leaving a very nice imbalance right here. Very nice fair value gap after creating the order block. And price came back for that order block, and guess what it did, guys? Guess what it did? I saw people talk about, oh, this price action is so boring, you know, talking about how price action is consolidating here, ranging. It wasn't consolidating, guys. It was accumulating. It was literally accumulating. Because how did you go into that order block? How did you go into that order block? Can't you see? Structures pointing down. Structures pointing down. Boom. Pull your range from low up. This is your bottom. This is your top. This is deviation 1. This is deviation 2. Wyckoff Model 1 accumulation tapping into a demand zone. And if you knew the bigger context, you would expect a higher low for a higher high here. Because we broke structure back to bullish from the top down, right? So this was literally a swing entry for you guys. Literally a swing entry. Because if we go on the lower time frame, this right here is where you broke your 1 minute structure back to bullish. That could have been your entry, okay? This was literally your entry right here. Boom. Put your stop below the low for a potential massive swing trade, okay? I'm talking massive swing trade. Where at least you target above this high, okay? And what did price end up doing? Well, I also talked to you guys about Wyckoff models flowing over into each other. Well, this was a clear indication of, hey, we have the Model 1 accumulation. We went higher, came back. This was just a higher low. And we break out of the range, come back, grab extreme liquidity. And this is your situation where, you know, you have your Model 1 going over into a Model 2. Then what did price do? Instead of immediately going higher and putting in a higher high, we left behind demand. So what did price end up doing? We left behind a demand zone. Again, we have mid-time frame structure pointing down. Mid-time frame structure pointing down. Pull your range from bottom to top. This is your range low. That's your range high. This is deviation 1. Now, you didn't have a clean accumulation here because you never got the third tap, which could have been a Model 2 or a Model 1, but it's still some sort of an accumulation. It was just untradeable, but we did deviate the low. So no, we weren't consolidating. We were accumulating, literally. And your entry, your perfect entry was right here. That was the best entry. And that's a trade I would still be in if I was aware of it and if I was behind my PC for it, okay? But no, we were not consolidating. We were literally accumulating, putting a nice, very round bottom. Because if you guys watch my Twitter posts closely, I also often talk about bars. And if you go on the bars time frame on the daily, what can you see? You can see an amazing daily high, and literally an amazing daily high right here. Very good. So what is expectational order flow after confirming a low like this and has 2 hours and 16 minutes to go? Well, let's say we close around here. Well, the moment Wednesday opens and you get a tiny pullback, that's where you need to find your long and you need to take it to new highs. That's what's expectational order flow when you have a bars low like this. It's a very clean low. And I said in that tweet, oftentimes when you have a very nice daily high or low using the bars pattern on the lower time frame, it will just be a Wyckoff. Like, guys, I am not teaching you bullshit. I'm teaching you concepts that happen all the time, everywhere, on any time frame, on any asset. So really take notes about everything I say because it comes back all the time and you want to be aware of it. So we got the Model 1 distribution, or just, you saw the signs of exhaustion at the lows. We broke structure back to bullish. Expectation order flow is a higher low for a higher high. We came back for demand, which was the only good looking order block, which was not, too deep of a mitigation. You had one right here, but I don't want to come that close to that low again. This was the only one that made sense to me. And we got the Wyckoff accumulation coming into it. So that's all you can ask for, right? Now, what's very important now is that we start reclaiming the volume area low of this range, okay? Because right here, we got the perfect rejection from the volume area low. So you want to see that volume area low get reclaimed. And what I mean with a reclaim is that I want price to come back into it, deeply, spend some time above, then get a retracement potentially, and then you see the signs of strength right here, okay? That's what I call a proper reclaim. Not just a candle close above and then the candle close immediately back inside, okay? No, that's just a deviation. I want a good close above, multiple closes above, spend some time above, and then potentially get the back test. That's what I call a good reclaim long, okay? Because if we follow our structure from the bottom up now on the 4 hour, this is it, okay? This is it. So that means that this is your new range now. That's very important to watch. What you do not want to see happen is that price starts deviating it and you get a Wyckoff here, a 1, a 2, and a 3. Because as that happens, we're going to have a very significant pullback, okay? Because then you failed to reclaim the volume profile, meaning you won't have a rotation towards this volume area high, okay? So it's very important that this does not happen for further bullish price action. Now, talking about some local rejection POIs that we could potentially reject from using supply zones the way we do it is... you have this supply zone right here. This is the, I don't know what I used. Oh, there you go. Right here. So this is a very significant supply zone. It's range supply, but it also has like this 1 hour order block, which is like a more refined area. So this is really the place to break, okay? So for that reclaim, it would be perfect to just break out of the range, have a very deep mitigation of this supply, maybe even wicking the supply, and then come back, spend some time, and then come back, and then find your long right here with the confirmation before going higher, okay? But you don't want to see, deviations that go like this, okay? That's not good, because then it could turn into a distribution and you're failing to come back inside the range properly. So very key what happens with this current range, because the range is confirmed on a higher time frame. This is a confirmed range now. Every single one of you should have been in that long we just discussed earlier here. But this range is very important. You need to break this range towards the upside, or lower prices are probable. Now, we could also come back down, right? And then we can start deviating the low. And from there, this could turn into more extended accumulation, where we have a Wyckoff within the Wyckoff, right? Where if this is your model 1, your 1, your 2, and your 3, and then this is just that LPS, your last point of support, your higher low, that could have another Wyckoff. That's totally possible. I would love that idea to happen as well. In that case, we would kind of have that move at the end of summer, beginning September. So could definitely happen that we start ranging here for a bit longer before having the aggressive expansion towards the upside. But this range is very crucial, and breaking past this supply zone is also very key if we want to see higher prices. But in general, guys, like I always say, when you have a Model 1, they tend to be aggressive, okay? They tend to be aggressive, so you want to see an aggressive move showing signs of strength. Now, you do have 2 other supply zones that you need to watch for price to reject from. Obviously, is this one that we were watching earlier, but price failed to tap into. And obviously, this is a very strong order block, guys. Like, this is a market maker order block. Why? Like I described earlier in like a few videos ago, this was the order block that was part of this Model 1 distribution. And whenever you have an order block that was part of a Model 1 or a Model 2 accumulation or distribution, I call a Wyckoff order block or a market make order block, whatever you want to call it. So this is a very strong supply zone, very crucial how this range is going to develop. But we are forming a very nice low using the bars pattern as well on the daily time frame. So I'm expecting some higher prices, at least short term in this week. We put in the pivot on the Monday, and Monday likes to put in a weekly high or weekly low. So maybe this is going to be the weekly low, and that would be nice. And I'm excited what this week has to bring. I'm going to go to bed now, guys. Be refreshed for tomorrow. Hopefully, we'll see some nice Wyckoff scalp trades, and I'll update you on obviously everything that I take. Before I end this video, I want to just, have a thank you to you guys, because you always thank me for providing the information and everything. But I want to thank you guys for also putting in the work, because like I said, giving is the ultimate fulfillment, but I'm seeing you guys take trades, and I'm seeing you guys put in the hours and asking me questions. I got so many questions from you guys, and I answer every single one of you because I love to teach and I love to help you guys, but I love to see you guys putting in the work. So thank you for not only listening, but also applying it to your own life, because this shit can literally change your life. It can literally change your life. And that's, I think, also the reason why I'm growing so fast, is because it's such a unique way of looking at the charts that's so effective. Like, it's not BS. You see me apply it every single day in a live trading environment. So appreciate you guys also for putting in the work, and I'll catch you all tomorrow. Peace.